All right. So the example I've just discussed in the first video that I've put together was obviously everything coming into perfect alignment, which on a day-to-day, intraday basis, you're going to struggle to get all that. We're going to struggle to get all these things all aligning all at the same time. So this was a trade I took a couple of days ago, Euro USD. Big, I mean, really nasty, really fucking nasty, choppy action. Um, it's just like stopping people out there. Then, people are, basing a framing a trade against this kind of structure here. They're getting stopped out. Then those that think it's going up, framing it against this, they're getting stopped out. You can see the big pink, the big purple pink, scarlet. I don't know what colour it is. Shade of red. You see that big shade of red S&D zone just suggests that you're in a big weekly S&D zone. So really, for framing anything based off of this, we're looking at the daily chart. This is the 4-hour chart. And all you can see, there's a big sell-off, but you can see no new lows are getting made. So you've got a bit of consolidation happening there. So go down to the lower time frame. This is the 1-hour chart now, and all you've got, I mean, nothing there except you can see momentum is trying to push up. You see momentum is trying to push up to the upside on the Mark D. The moving averages there, I mean, you are beneath them, so you guess you are in a way pissing into the wind on this time frame. But if you just you're in a clear, choppy, nasty range. So you just ignore the moving averages in this kind of circumstance. Just focus more on price structure and where the path of least resistance is. Now at this point, this could be setting up as a bear flag to continue down. It could be setting up as a reversal. You don't know at this point. A lot of people will try and know based on M's and what have you, but trade that as it is. We'll now look at the 15-minute. Trade that as it is, and you're asking for trouble in my view. This is the 8 o'clock open. Obviously a significant time or close to it, is it? I'm not sure. And this is just prior to the London Open. Right, so go on what we've got on our screen. We are in this big weekly supply and demand zone. I'll not go bother with that. This is the yellow colour indicates this is drawn off the 4-hour chart. So you've got certainly got an area of potential resistance up here, but often when you see this big fucking jackknifing of fucking price action, you can rest assured the bounce should, not necessarily, but there's a good chance that it's going to bounce a bit higher, maybe up to this one, this S&D zone here, or maybe a lot higher. But anyway, so we're looking. We've got here. So bang. So there, that's a bit of a fake out, but no, it comes good. So that's now. Maybe we should get the Heikin-Ashi candles on to explain. Now the way these are used, is you're looking for a break, close, and retest of key zones. Okay. Now you don't really have a pivot as such there. Usually I like to see some kind of anchor break. I mean the nearest anchor, i.e. swing high, swing low, swing high, swing low, swing high, is up there. That's the nearest anchor I can see. But but we'll treat this with caution, but we can get a bit of a resolution now that price is broken out above this 15-minute supply and demand zone as designated in turquoise. If we can get a bit of a break, close, and a retest, and a continuation beyond there, that gets me confident that we can fill in some of this space left by this great big heavy sell-off. So you've got your breakout, and price is certainly closed beyond that level. And now are we getting a retest? Now there's your retest. Now, the way Max Norbury teaches this is he's looking just for three green candles there. 3 green Heikin-Ashi candles with one good bullish one. And that doesn't really count. So, but before we jump the gun, we're going to go down to the time. We're going to go down to how I traded this, and we'll refer back to that. So I traded this off a 5-minute chart, and for the 5 minutes my entry chart. Then a half hour will be my signal, but it doesn't change much. This also applies. This level also applies on the half hour chart. We'll just fatten those up a bit, our momentum indicators, so we can see what they're telling us. Right. Now a very aggressive way of playing this was going right. So you've got a break and a close above this key level, and you've got the retest, and then you've got a continuation that's putting a new high. So what you could do is go, well, I'm just going to do that, and I'm just going to I think this isn't far off. I mean, I start these videos, I always forget exactly what I've done, but this isn't far off what I've done, to be honest. And think we just went something like that, and we gave ourselves. Well, let's have a look. Now, something else uses pivot points. And there's the daily pivot up there. Now, there's a rule. There's a rule in and of itself. And the Euro USD, I mean, something like an 80% chance that at some point during the session, the pivot point will be hit. So with that in mind, that's a target. Now, I didn't hold out for all that. I took a lot less because I'm thinking, well, you've got this fucking supply and demand zone there. So this is roughly what I went for. I'm in the habit. I'm not sure about this, but it just makes me feel more comfortable. But it does very often slaughters my risk reward more often than not. Sometimes you will get flushed out here, and this will save you. It's just something I do, more psychological than rational. So now that's the trade. So what you've got this key level, you've got a break above and a close, and you've got a retest. And then you've got a continuation. Not here, but here when it breaks the previous high. So this now I'm counting as a good pivot. Now looking at our indicators. You don't have consistency. I mean, this high, you notice it's kind of divergent. It's divergent at this point, but this is what I'd call a trend refresh. You can see, like, RSI high is way up here, right? And then price high is way up here, but what's this? RSI is lower. And then again, what's this? A new high, RSI is lower still. Now, a lot of people, I mean, the way that educators teach people to trade, certainly when I was taught to trade, be looking to short that. But the way I view this is a trend refresh. You've got this trend line, cover. In fact, that isn't really how I'd draw it. I mean, how I'd really draw it, well, leave that. That's more advanced. I'm not even sure if it is advanced. I'm not sure if it's a crock of shit and I really need it or not. But for now, I do use it and I do refer to it. So that, yeah. Anyway, talking a lot longer than intended, and that's pretty much what we were doing there. And as obviously price continues higher, I adjust my parameters accordingly. And I kept that. I always go for just below levels, so something like that. Now what we can do is look actually at the 15-minute chart. So there you've got the classic thing that you're looking for, right? I mean, I've got my way of doing it on the front, but it's the same thing. Break, close, retest, continuation, beyond this supply and demand zone, following the path of least resistance, which is to the upside. Arguably, this is resistance I thought it might be, so I limited my upside target there. And what you've got here is 1, 2, 3 reasonably good solid Heikin-Ashi candles. Arguably, maybe not. The Max Norbert way of trading that, these like maybe enter it up here. I don't like doing that. I like my 50%, 61.8% retraces. As you can see, I like to give myself a bit of room just in case they try to fucking dick fuck the stop losses down there. So what you can see is the stop loss is comfortably beneath the supply and demand zone. So if this is valid, for the coming session, this should hold upon its next retest. And yeah, and well, what are our momentum indicators saying? Well, we don't care on this occasion. And right, so you've got the fill. Now at this point, we'll refer back to our 5-minute chart. And obviously, every time if you think you're going to get stopped out, every single time, but that just reversed away very nicely. And I even left it a little bit early. We even left that trade a little bit early. Just kind of snatched it when it was coming close. We'll just go up to the higher time frame, but that could have been a huge winner. I mean, I calculated, had I not bothered with this extended stop loss, etc., all well and good, just had it behind this logical pivot. It could have been like a 6-1. It went, I don't know, something like a way up here, something like that, or did it? Yeah. So and so there you go, and there you can see. There you can see, this supply and demand zone got busted. This one didn't, and that totally reacted as resistance. So okay, I'll keep this. That's that trade done. I'll move on to the next one, which is also in Euro USD and was a loser, and we'll look at why that was.